Hello and welcome to FinextraTV. I'm Hannah Wallace and we're here at Cybos 2019 in London. Kindly joining me now in the studio is Rowan Austin, Head of Trade Finance, Advisory and Origination at NatWest. Hello Rowan, thank you very much for joining us in the studio.
Hi Hannah, thanks very much. Great to be here.
No problem at all, it's happy to have you. So on the topic of trade finance, managing working capital can be both complex and challenging for the corporates. So to start off, could you tell us how is technology and digitalization helping them here?
That's a hugely broad topic because one of the most oldest forms of trade finance goes back sort of 3,000 years BC with a clay tablet, which was a letter of credit in ancient Babylon. So it's come a long way since. I think that the key things that technologies enable customers, corporate customers to do is interact with their banks much easier. So firstly, in the last decade, we've seen lots of banks develop much better and more efficient channels, enabling their customers to plug into them to be able to manage their trade services, to help their cross-border trade. Now, that's been sort of definitely one of the trends we've seen, but it's not necessarily the most exciting one, because I think now we're at a point of inflection in digitization where we need to make a distinction between both trade finance and trade itself. So the underlying trade itself is what a bank and a corporate are looking to finance. And what we're seeing now is technology is helping to digitize that end-to-end trade much more than we've ever seen in the past. So there's much less paper involved in the process. The dozens of counterparties that are involved across an end-to-end trade are now starting to pick up and use digital tools to make it much easier for corporates to trade and to trade cross-border and to do it quicker and easier. At the same time, what we're seeing is banks are able to pick up on that in terms of making it much easier for corporates to use those channels and to access finance. So I think what we're seeing ultimately is the combination, the inflection point between trade finance digitizing and trade digitizing.
All right, well, following on from that quite nicely, how are banks leveraging this technology to help businesses better manage their supply chain?
A number of ways. So firstly, what banks are doing is making sure their own internal processes are fit for purpose and much faster and slicker. So again, if we think about the paper-based nature of trade historically, banks such as us, NatWest, we're using much more tools such as robotics, artificial intelligence, much slicker processing to make sure we're getting paper out of the process. We can help companies trade much quicker and trade with us much quicker. So that's one of the important factors. The second is what we're starting to see is the emergence of blockchain technologies. I know we're going to come on to talk about this a little bit later, but what blockchain is doing is making sure that trades from an end-to-end perspective are much more visible. And the challenge with banks and corporates is that throughout a trade, it can be quite opaque to understand exactly what's happening at any given point. But what digitalization and blockchain is helping is both banks and corporates to understand exactly at what point a trade might be in the supply chain. So I think that's the second thing. The third thing is what technology is enabling is a much clearer view of supply chains. Now, I guess traditionally, a trade would have been making something in one country and selling it in another. But the world now is much more complex and interconnected. We're much more globalized. So it means that a product can pass through many borders, many countries before it gets to its final destination. That's the sort of global value chain that a product will go through before it gets to its end market. Now, ultimately, understanding that is critical. Wherever you are, whether you're a supplier or a buyer in that supply chain, you've got to understand exactly where you are in that supply chain. And what technology is also enabling is corporates to have a much better visibility of where the risks in their supply chain might be, where the concentration challenges might be, and therefore to help them understand, to manage those risks, and also to maximise the efficiencies in those supply chains.
All right, and to make this truly efficient, what do corporates need to invest in to really reap the benefits, as it were?
So what corporates need to invest in? It has been overlooked in the past. Definitely mapping supply chains and making sure that using the right kind of technology tools to understand exactly where the risks are in that supply chain from end to end. I'll use Brexit as an example. So we've been encouraging our clients in the UK and Western Europe to map their supply chains to understand exactly where the challenges are. So you might think that your supplier is in the UK, but where is your supplier's supplier? and their supplier, are they based in Western Europe or an area where Brexit might be a challenge for them? So that's very important. So one thing is spending time and effort to map that supply chain. That's really important. It doesn't have to be a hugely digital process, but it does take time and effort to understand it, and we see real benefit in that.
All right, and coming back to this topic of blockchain, which you've touched on already, can you tell us what is the significance of blockchain within trade finance?
So blockchain within trade finance, I think if you think about the applications of blockchain and the challenges of trade finance, the two are perfectly linked. So blockchain and distributed ledger technology is all about helping to get transparency and trust within a process. So wherever you are in a particular process, you know that the information you are seeing is true and that you can trust the counterparties you are operating with. The challenges within trade finance are exactly those two things, in that you need to know who you're transacting with and you need to know the information you're getting is correct. So it takes away the opacity and brings back transparency into trade finance. So what we're seeing is lots of investment and lots of excitement in many of the trade finance platforms that are operating with blockchain or DLT, particularly around Project Marco Polo and WeTrade, which are offering essentially an end-to-end platform where corporates can interact with them through the banks, and they can partner with banks to finance and support them in any different areas of the trade where they're going to need support either through risk mitigation or through financing.
I think it's safe to say watch this space.
Absolutely.
Rowan, thank you very much for sharing insights. I'll let you get back to the event. Thank you.
Thank you.